So you know you want to start trading, but most people just don't know where to begin because there's just so many different strategies that people are talking about, and everybody's coming from a different vantage point, whether that's time, money, or experience. And so in this short video, I want to start outlining the advantages and limitations of many of the most common strategies that you'll be introduced here at Funded Trader. So let's evaluate where we're at. You have to understand this. All strategies are not created equal. Each of them have advantages and limitations. They're designed for different account sizes and sophistication and amount of time that you're going to be putting into your trading. You also have to recognize personally what you need your trading to produce for you and what you're willing to put into it so that you're getting out what you need to get out of those trades. So with starting with, say, a budget of about $10,000, let's drill this down and evaluate these strategies so that you can determine which one best fits your risk profile, your time management, and your account size and your expectations. So let's just start at the beginning. Stock trading. Okay? The advantage here, it's as old as time. Buy low, sell high. You find a good company that you like, you purchase the shares of it. As the share price goes up, you sell it and you take your profit. That's the advantage of it. As long as you don't need the cash and the company doesn't go to zero, you can wait through some of those ups and downs. But I'm also going to say some of you are holding on to some stocks that you should have gotten rid of a long time ago because they're not only tying up cash, they're tying up opportunity costs. And I know if you would have sold it back then, you would have been a millionaire and you're just holding on to it, waiting for it. Well, sometimes you just need to get that capital and get it turned into something that can make you more money quicker. Now, the limitation of stock trading is you only make money in one direction. If the stock goes up, you make money, but if it stays flat, you lose. And to get that leverage, you typically need to buy a lot of shares of it, so it can tie up more capital. But that's the advantages and limitations of stock trading. Now, naked puts, this is an option strategy, and the advantage of this is you get to buy a stock that you like at a discount, and you get to name the price. So you're committing yourself to buy a stock at a lower price, and if the stock goes up, I keep the premium. I make money. Stays flat, I keep the premium, and I don't have to buy the stock. And if it goes down, I buy a stock that I like at a discount. Those are some great advantages. Some of the limitations might be that it does require at least $2,000 in your trading account, and some brokerage firms have higher house rules. It takes a little bit more time. You're going to be sitting on it for a bit longer, possibly an entire month or 6 weeks or 8 weeks, depending on how much time you've sold here. And your potential rate of return, it's fair. So it's not a real whiz-bang high rate of return strategy, but your odds of winning are higher. And the limitation is, hey, you buy a stock that you like at a discount. And that's naked puts. Now, covered calls. This is the strategy where you own a stock and you rent it out, just like you would a rental piece of property. The advantage is it does involve some stock ownership. You get paid to own a stock. You get to rent it out just like you would anything else. And if the stock goes up, you make money. If it stays flat, you make money. If it goes down a little bit, you've lowered your cost basis by taking in that premium and renting it out. And you can still sell your stock. Now, the limitation is that if I'm going to buy some stock, it's going to tie up my money. It's going to tie up my resources a little bit longer. But my rate of return is pretty good. And my odds of winning are solid because I own the stock. Goes up, make money. Stays flat, I make money. Goes down a little bit, I lowered my cost basis and I keep the stock and I do it again next month. So this is a great strategy for those people that already own a bunch of stock. And some people like to, accumulate these portfolios that allow them to do that down the road. Credit spreads. The advantage, this one does not require a large trading account. The credit is received when you enter the trade, and compared to a directional trade, your odds of winning are twice as good. So in a bull put spread, the stock goes up, I make money. Stays flat, I make money. Goes down a little bit, I make money. I keep the premium. Now, the limitation with a credit spread is you could be in this trade for 4 to 6 weeks. You don't have to be, but typically it takes a little bit more time. your potential rate of return, it's pretty good. With a credit spread, you're looking at anywhere from 10 to 20% rate of return in a month. Now you annualize that when you're looking at over 100% rate of return for the year. I mean, don't turn your nose up at a good rate of return like that. They are a little bit more sophisticated. You're using options, calls and puts, and you have to manage them. But for credit spreads, the advantage is you don't really have to sit there and look at them every single day. You give them enough wiggle room to where they can, go up or down and stay flat, and they're a good, solid strategy. Even with a smaller trading account, you can get some good rates of return on it. You're probably not going to get rich overnight, but I've heard it said that I'm not so concerned about the rate of return of my money as I am the concern of the return of my money. In credit spreads, your losses are capped. They're a very solid strategy, which takes us to another strategy called calls and puts. Again, this is an option strategy. The advantage is low cost of entry, great rate of return, allows you to leverage more expensive stocks, and they're short term. We're very leveraged when we're buying calls and puts. They're a directional trade. If I buy a call and the stock goes up, I make money. If it stays flat, I lose that time value and some intrinsic value. And if it goes down, I lose time value and intrinsic value as well. So they're a great rate of return. Limitation is I've got a 1 in 3 chance of making money. If they don't move in your anticipated direction, they can really deteriorate very quickly. So when we're trading calls and puts, small account, great rate of return, short term, in and out. If you've got the time, they can really increase your account, but you better know what you're doing. So let's talk about this. We've looked at the advantages and limitations of this array of strategies, so let's take it back and boil it down to where you can begin. You need to choose 1, maybe 2 strategies to really focus your energy. What I see many people do is they get all excited about these different ways to make money in the market, and they get so scattered that they end up doing nothing well. So with an account with $10,000 or so, we need to really focus in on 1 or 2 strategies. Time, money, and rate of return. Now, this is a personal thing. You have to determine what you're okay with. Here's where I lean. Calls and puts. Bread and butter. Short-term directional trades, great rate of return, get in, get out. They're aggressive. I also do credit spreads. Bear call spreads, bull put spreads. Okay? They're a little bit less aggressive, more consistent, good rate of return. And some people still want to do some stock trading, so you may purchase some less expensive stocks. But I like to go where the action is. I trade more expensive companies, and I leverage those with using calls and puts and credit spreads. The other strategies become more appropriate as you get into more intricate position sizing and diversification, and we'll grow into those. But most people need to start somewhere, and they're willing to put in, $10,000 or so, and so that's where I wanted to focus our energy for this lesson right here. So evaluate each of the advantages and limitations of these, review this, and as we get further into the classes here at fundedtrader.com, we will break down each of these strategies in more detail. So stay with us, check back in at fundedtrader.com, and we will get into these more advanced strategies and get you up to speed.